So Gwyn, thank you so much for joining us today on the podcast.
Thank you very much. I'm very happy to be here, obviously.
Yeah, no problem. So to start off, can you just tell us a bit about yourself and your finance career?
The finance career, I've had many careers, but way back in the day, initially I was a broker, and that was interesting, being a middleman and getting to see the demands of market makers, and being piggy in the middle, so to speak. And that was great because it helped develop communication skills, but in negotiation and being able to pull people together very, very quickly. After that, I wanted to, I basically wanted to be the market maker. I wanted to be the one making the prices and making the decisions, which I did. I ended up as a head trader, which was a lot of fun. It was crazy, as in this was like, as I said, this was way back in the day. Okay, so the old movies or the movies that you watch about people having 2 or 3 phones, actual real phones to their heads, getting irritated, smashing the phones to pieces, unplugging them, plugging another one back in. That was all real. That was all live. I don't know how much your listeners want to hear, but basically Wolf of Wall Street was all true. Yeah, it was, that was good. After that, I left. I traveled for a long period, well, for several years. Got back into, basically I never wanted to work full-time again. I did well enough. I didn't have to work full-time. I just did stuff that was interesting for me. However, the markets, I think there are 2 main things that are the great puzzles of the world. One is the financial markets and what drives that, and the other is the human brain. I got more involved with neurolinguistics. I got involved with the psychology of people's behaviors. And then obviously there's an overlap between, maybe not obviously, but there is an overlap between the way in which people think, the way in which people think they think, and how that manifests itself within the markets. So my approach has become much more macro, rather than being when I was actively working for the financial institutions, it was on the spot decision making. These days, it's much more strategic. It's understanding what's going on at a macro level and looking to understand it faster than other people, and seeing what the longer term ramifications are, and then being able to take advantage of that. One of the great things I think about when you get to this stage is I can live wherever I want to. I can work as much or as little as I want. Now I help other people get into investment banks and law and all this other stuff, but and help companies who are looking to scale. But I'm still involved in the markets. I'm still involved in what's going on. I think I believe that we live in fascinating times where there are huge opportunities for people to be able to take profits, and to there is such an asymmetry in information. Or rather, maybe not so much an asymmetry in information, but an asymmetry in interpreting and understanding information. Whenever you get those gaps, there are opportunities.
Yeah, perfect. That was actually leading on to one of my next questions. So one of them is sort of, how do you filter through all the white noise? So obviously there's so much information out there, especially now. That's probably something you mentioned then.
This is, and that's, yeah, it's a great question. And the unfortunate answer for many of your listeners is that who was it? Malcolm Gladwell, I think, who did the it takes 10,000 hours to become an expert in something. I did for my coaching side of business, I think I did a calculation. I've done 40,000 hours of one-to-one coaching. I don't even want to bother to think about how many hours of Bloomberg I've listened to over the years. It's full immersion. Basically, you read, you listen, you immerse yourself in it, and this is not extremely helpful. First of all, you need to understand the dynamics. You need to understand the basics. You need to understand what are you interested in? Is it fixed income? Is it commodities? Is it currencies? Is it equities? Is it the indexes? What is it that you're going to play with? Once you've got your head around that, I mean, I've got a feeling that you're probably going to ask me about bonds later. I truly and utterly hate bonds. But anyway, I really enjoy identifying what are the big drivers for these different investment classes. And what you need to do is look for information ticks. So it's something that stands out when you're listening. And I've got to get this right for your listeners. You're absolutely right. There's a huge amount of noise, but you've got the noise that is the basic data flow. You've got your latest mortgage information. You've got your new housing starts. You've got your Fed minutes. You've got your unemployment stats, right? You've got you've got all of this, which is fine and it's useful, but everybody listens out for it, and that's fine. It's okay. You've got the noise that is around the IPOs and the valuations and all of that, but that doesn't actually. That's not the big. For me, that's not the big stuff. It's useful and it's a way of trading for sure. But what I look for are emerging or developing stories. So and even ones that are going to unfold over a longer run, by which I mean 3, 6, 9, even 12 months, because what I'm looking to do, and what I advise others to do, even though please do your own research. I am not a professional advisor. Is to and value of your investments can go down as well as up. Is to find some sort of hint or tip as to what's going on. I made a long list of people that I'm interested in. So people like Mohammed El-Arian, Kit Jukes, various other. There's a whole list of people who are regular, Ray Dalio, whatever. The people who are who know what they're talking about. They've got the expertise. This is you don't want to be reinventing the wheel. You want to listen to people who really know their stuff. They're not newcomers to the market. They've been through it, and when they are talking, you actually actively listen to what they say. Then, if you get this combination of 2 or 3 of them overlapping or moving in the same direction, then that says go away and do your own research on it and find out what's happening. The stuff that we had on it was way back before Chris must have been, well, it certainly wouldn't have been this year, but which was December 2020, so it must have been December 2019, or between December 2019 and March 2020, because I'm usually skiing in the winter time, and several of my ski buddies were heavily into crypto, and then it crashed right down, and it's like, okay, look, just keep it, just hold it. Let's see what's going to happen. It'll go up and it'll go down. It's fine, but long run, there's an underlying story here. I was talking on another on a regular podcast that I do, and on another podcast, and I think it was late November, early December last year, whenever it was, that Bitcoin was at 11,400, and the moment you get PayPal come in, and you get a couple of other big names, I mean, things like Novogratz and Galaxy, and that's fine, and they're superheroes within the crypto sphere. But when you get Main Street players, and when you get people like Diamond changing direction on this, then there's something at work, and the upside. There's a narrative, there's a story. And it's not just cryptos, because I mean, your listeners. I mean, the great one last year was the Turkish lira, the demise of the Turkish lira, which was one of I adored it, loved it to bits. I've got several really good Turkish friends, as they say, and it was rough for them, but it was a one-way downward story, and you could just see the turmoil that was taking place in the country. You could see it was just day after day, week after week. In fact, it was month after month, and the narrative was there. so you ride the story, you ride that particular story, but you're looking for stories that have got legs. We've got an issue with things like oil, and I've been burnt on oil more times than I care to mention, because of the number of variables that are at play, the number of drivers, the number of catalysts that can shift it, and therefore it's very difficult to get a decent long-term play on oil. But on certain currency pairings, certain stocks, we're looking for, I like to look for big themes that are gonna, as I said, move forward for 6 months. You've also got the lock away stocks. There's a sort of two-part philosophy here. There's the ones that you're looking to invest in the medium term, but then there's also the ones that you think, what's the downside on this in the longer term? I know something like Disney. I'm a huge fan of Disney. Yes, there are going to be more competitors coming in, streaming services, whatever. But you look at the back narrative of backstory of Disney. No other streaming service has their back catalogue, 100 years of movies, of characters, plus a driving force to continue to build that a supply of new superheroes or new high-profile characters, and therefore, with the rollout of 5G, and obviously we're already talking about 6G, but with 5G and the part of augmented reality, virtual reality, the princesses and the superheroes have got a whole new playing field. And that's just going to be another revenue stream. And it's things like this that you can just buy and forget about. Sorry, that was a really long answer. I'm sorry.
No, that's right. It was very interesting. Very interesting. So it sort of links to another question I have. So do you have a specific strategy? So you sort of said there that you wait till you find 3 people who you sort of trust and you like, and then you do.
It's not always 3 people, but it's as I said back at the beginning, it's being a puzzle. But in my personal psychological profile, my number is 2. I like you get 1, 2, or 3 or more is generally the way it works, and I'm a 2 person. So if I get 2 people who I in the past have identified as being people that I trust or respect, that will be enough, and then I'll go looking for it. But then you do not, the big thing is so much time is wasted by people starting from scratch. And no, don't do that. Find places. It can be blogs, it can be speakers, it can be notes, research notes coming out from certain institutions, whatever, that over a period of time, it can be gurus on eToro or on other websites who have got a strong track record, and do track them over an extended period of time. But once you trust them, then get involved, but do your own research first. The process is hear a bit of news, go and see what else is, what articles I can find, what information I can find, what data I can find. Then it's about looking at, okay, so if I were to get involved with this, what do I see as the upside? What's the downside? Make sure that I'm hedging against the downside. Don't want to be. You're going to get winners, right? You're going to ride the winners, and it's just people get what do I want to say here? Fear, I think, is one of the big problems in the markets, that people chase their losses, people get scared, and also they fear and greed. It's the same old thing year after year. It's okay to ride your winners if you're doing really well, but you take money off the table. You have to take money off the table. Once you're well up, you take some of your chips off the table. That's okay, and then you ride it through. Then you take a bit more off, and then you've got a bet to nothing, and then everybody's happy. The philosophy is really, you also got to learn to trust your own instincts, and this comes from taking losses. a lot of the people out there at the moment of in this, the bull run, they think it's easy, which is fine. Without wishing to be negative, it will end in tears, and there's a lot of people who are going to lose a lot of money at a certain point in time. But and that's okay as long as it's a learning experience. But protect yourself. Please protect yourself.
Yeah, okay, perfect. So I guess if we go straight on to the macroeconomic sense, I've got a few questions about this. So if we move sort of across the pond to the US, I've been quite surprised to see the Fed Chair Powell and many analysts, they're sort of downplaying the inflation risks that we're seeing in the US. And recently sort of talking down the possibility of even increasing interest rates this year, even though we saw a massive increase in CPI just this week. Do you see potential for sort of a devaluation of the dollar similar to after the GFC? Yeah.
I agree with you. Sorry, it's not exciting for your listeners, but I think this is being massively underestimated, the risk of inflation. For a number of reasons. Okay, there are we have deflationary pressures because of technology and the unfolding and unrolling of technology across all industrial and business sectors, which is reducing prices, which has a deflationary effect. Fine, okay, cool. We did have globalization, which was also reducing or having a deflationary impact, but I think globalization is now well and truly dead, and anybody who doesn't think so is, well, I would disagree quite strongly. The breakup of the supply chains, which we've seen through COVID, but also the antagonism between the US and China, and the way that was playing out, where we've got a bifurcation. We've got two separate parts of the world, and we're going to get allies for China, get allies for the US. I think this is one of the grand narratives. There are several grand narratives going on at the moment that I'm really looking forward to seeing unfolding over the next 5, 10, 20 years. And to know whether I'm right or not. But anyway, the inflationary pressures. Are we talking about demand side? Are we talking about supply side? We're talking about supply side. We're talking about supply side pressures. We're already seeing it on the, for example, on the semiconductors, on the chip side. We're entering a chip war at the moment, which has really huge geopolitical consequences. I mean, we've had the meeting. What are we now? What's the actual? What is it today? Today's the 15th of April. We've had the 2021. We've had the meeting with Biden, pulling together people, trying to get a US focus on developing our own chips. China is already scared witless about the chip shortage and what they're going to do about it, which really augurs badly, even more badly than usual for Taiwan. The inflationary pressures on food. Look at what's happening with the weather. We've got huge problems, whether it's with the droughts, with the flooding, with the changes in. I'm not really that concerned. Sorry, people. I'm not really that concerned about the tides rising, but I am concerned about extreme heat and cold and flooding events, which screw up the seeds, which screw up growth patterns. We've already seen problems in France again this year. All of this is going to lead to more extreme events, more black swan events. And that's going to drive up inflation. We're getting greater protectionism. We're getting the idea that countries are going to be onshoring, that they're looking to bring back production, manufacturing, and securing a lot of their particular services within their own sphere of influence. Okay, if you're going to do that, you're going to have higher salaries, which is then going to lead on to inflation. But I don't really see that as the overarching narrative. Perhaps one of the greatest issues is the ton of debt that governments have issued and are continuing to issue and will continue to issue. And how do you get rid of debt? How do governments get rid of debt? The only way they're going to get rid of it, but is allowing inflation to exceed these nominal targets that they've set. And this phrase that is irritating me intensely at the moment, let's allow the economies to run hot. Run hot. Yeah, that's fine, but the little people get done over when you get inflation. Their assets are eroded, their incomes, any sort of little increase in salary that they get is wiped out through inflation, let alone by the major tax hikes that are coming down the road. Yeah, I think I see there's a huge risk of inflation because governments want it in order to reduce their overall debt load. I still don't think that inflation is going to be enough to mitigate what's happening with the various governments' debts, and there's going to be other actions that need to be taken. But you've got to come at this from multiple different angles. Come at it from the rare earth side. We had Biden, he had another meeting about rare earths and about how the importance of rare earths for electric vehicles, for all of our electronics, and for the renewable sector, and for whatever. But most of that is, so much of that is controlled by America's great allies, China, Democratic Republic of Congo, etc. So there is a major problem, and this is going to cascade into the inflation mix. Yeah, basically, end of story. Inflation is going to increase way more than expected. I believe holding a significant percentage of cash is really important so that you can be opportunistic. But you have to. So you see something, okay, blood on the streets. You want to buy something, fine. A particular bargain, you've got to be in a position to step in. But at the end of the day, it's always a trade-off against how much is that money being eroded versus your opportunistic risk. Opportunistic risk usually pays really good dividends. Very happy, therefore, to keep it in cash. But generally speaking, cash is a really bad bet when private equity doing really well. I'm a big believer in private equity and what they're doing and the way in which they do it, and they're highly leveraged. They're not dumb, those folks. So they're not going to use their own money if they can borrow. And these days, borrowing at these rates is hugely good. You've got the carry trade. You've got to make sure that you hedge for currencies, etc. But it's borrowing money, investing in other assets. But you've got to be, you need to be selective. And this is one of the reasons why. Okay, that's quite funny. I was having a good conversation the other day around virtual land in e-games, and I was okay, is it really coming to this? And then you go and have a little look at the increases in the value, whether it's in ethers or BTCs or whatever. Those are significant price rises, and you're going to do, and it's another asset class. And as we said, if you believe the overarching narrative, which I do, of increased activity within the virtual world, and I think if we look at COVID has just exacerbated this. The world's major introverts have become even more introverted and are going to spending more of their time in this particular place. If travel does not come back as expected, if there's a type of generational fear, I might be over exaggerating, but if there's been some sort of fundamental change in the psyche, then people will either not be able to afford to travel or do other stuff, and might choose to get their experiences in the virtual world. In that case, the money they would have spent on going on real world holidays will be spent on buying assets in the virtual world. It's another narrative. Have I gone so far off track? Sorry, what was your actual question? Inflation. Yeah. Bonds. Forget bonds. What are you going to do? How long are you going to take you to get your money back? Oh, it's negative interest rates, or what are you actually yielding on some of these bonds? Complete and utter waste of space. That's why I hate them. And then not only is the fact that it's so low, but it means that you've got to put your trust in government. Whew. Right, okay. How well's that worked out in the past? Not really interested. I think there are so many other ways in which to make money into it, to invest, and to spread the cash around. I think people need, your listeners, look for themes, look for thematics. What is it that's going on? And then follow that thread. Okay, there you go. Inflation, big believer.
Yeah, no, that's right. And sort of what you're saying, it reminds me quite a lot about the Black Swan book by I think it's
Taylor.
Taylor, yeah, which is just, he talks about building that narrative and putting it together. And then sort of what you said before, you have a few investments that you put aside just in case that thing, something booms, then you'll be trading with the rest of it.
You forget about it. It's dead money.
Yeah.
It's like, it's like earlier, I'm a big horse racing fan and rugby fan, but let's say horse racing fan, and you put your anti-post bets on, it's dead money, but a little bit more, and if it comes in, you're going to make it at a big price, and if the price shortens, you can always hedge it. Okay, it's pennies, but for big bucks down the road.
Yeah, definitely. So I'll sort of link it to someone that you mentioned before was Ray Dalio, and I know he sort of talked about that he thinks sort of the US is getting quite close to sort of the end of a debt cycle. And that's sort of a narrative that he's put together as well. I'm not sure if you sort of have the same thoughts.
I would completely agree. I mean, yeah. I certainly believe that America is at the end of empire anyway. I've been saying this for years, and it's no big secret. China is going to take over. China dominates the 21st century. Yes, there are certain events that could alter that. I don't believe that they will happen, but that's my particular perspective. I think that they've been incredibly strategic in terms of the slow but very positive creation of a hybrid model that brings both. I can't remember what was it, 700 million, 900 million people raised out of poverty over the last 20 years through the Chinese model. America's at end of empire. If I'm bored of an evening, I rarely get bored, but sometimes just for a laugh, I'll go and have a look at the American debt clock, just because I can't believe it. The American debt clock, top left-hand corner, watching the rate at which their interest payments and everything else is going up. It's not sustainable. Could they ever default? Yes, they could. Who would that screw over? It would screw over Japan, who own a huge amount of their debt. It would also screw over China. So, probably a deal to be done there somewhere. But it's over. It's over. I think that America can support autarky. I mean, they can be self-sufficient. They can be inward-looking. They can do their deals with Canada or with Mexico. But they can be self-sustainable. But their role as a global superpower, I think, is over. The idea of the almighty US dollar is done. The renminbi, yuan, whatever you want to call it, is going to be will take over. It will take over. But it depends. This brings us back to the idea of the spheres of influence. But prior to 2008. We had, or the GFC, as you said, finance ran politics. Post 2008, politics runs finance, not only because of regulatory controls, but because of the geopolitical changes and fractures that have taken place and that are widening. One of the things that I bring up regularly in talks. I don't know if your listeners know about it, but the SCO, the Shanghai Cooperation Organization, which is one of the biggest pacts that few people know about in the world, and it's between Russia and China, or I should say between China and Russia, because China's on top. Several of the stands, but also with many other countries involved. This is a deep-rooted geopolitical pact. They've run war games together on a massive scale. It's just not reported. It's just not reported. And and then if we go back, I can't remember. This was, it wasn't Alexander's time. It was to be, I can't remember. Okay, several centuries ago, maybe even longer, maybe millennia. The Central Asia was seen as the navel of the world. Okay, it was the center of the world, and I think we're returning to that particular perspective, whereby whoever controls that part, because of the nature of the land masses and the interconnection of the land masses, will thereby dominate the rest of the world. America is isolated. It's geographically isolated. Even if you bring in the idea of nuclear weapons and you bring in extended, but they haven't got the logistics. They don't have the finance. Sorry, your actual question was about the debt cycle. It's not sustainable. They're going to have to find a way out of it. The US dollar will become a second-rate currency, third-rate, fourth-rate currency. Because of their population size, and I don't know what the interesting bit is. I don't know what they're going to do in terms of, or where Latin America is going to go. If you look at Chinese investments and involvement politically in Latin America, it's already pretty steep. Not as steep as in Africa, but it's still pretty steep in LATAM. So that could also turn against America. Maybe, not sure yet. Why would you want to hold US Treasury bonds? I've got no idea. In the long run, it's over. It's done. Sorry, does that make sense?
Yeah, definitely. And I think it's something that they're saying, that just because there's going to be such a lower supply, lower demand for the actual bonds, so obviously the yield's going to go up, and then they're going to have to start printing more money, and it's just going to sort of that's I think that's sort of what Ray. Yeah.
If you look at the trends for because as I said, China used to be one of the major buyers of US Treasury bonds, but also US dollar assets. But if you look at the reduction of their US dollar assets over the whatever it is, last 5 years, last 7 years, it's a definite and deliberate move. And if you look at the Belt and Road Initiative, and those, whatever it is, 76, 78 partners that China has in the Belt and Road Initiative, who are taking on the renminbi as their trade currency, as their reserve currency, they are being encouraged to move away from US dollar assets and move into other ones. I mean, 3 or 4 years ago, we also had, I don't even know if it's ongoing, I haven't followed the story, which is my bad, but the pricing of certain types of oil have been done in other currencies other than the US dollar. One of the big issues in the world is the fact that commodities, gold, silver, oil, whatever, wheat, are in the US dollar, which leads to the appreciation of the US dollar. So it'll be when we get the move away from that, and through the dollar domination of the commodities market, that's going to be important. I also think that, for example, the establishment of the AIIB, the Asia Infrastructure and Investment Bank, and alternatives to the World Bank or to the IMF, globally helpful organizations, it never ceases to amaze me at the way in which so many Westerners, particularly Americans, refuse to accept that the Chinese hybrid model actually works. It actually works, and it's like, I'm a what am I? I don't think I'd like to say what I am, but I do. One of the things I do care about people, and if you get people, this talking about certain first world values. If you haven't got food on the table for your children, which is what China has done, it's got food on the table for some of the poorest people in the world in a sustainable way. and it's now rolling out. I sound like a Chinese apologist, which is okay. It's another story. Okay, you can follow up on that if you wish. But it's the outcomes. It's the outcomes, and I think more lives have been saved by adopting to these new models. And it's the classic throughout history is people thinking that their way of living is the right one, and it will be eternal. Rather than recognizing that we're at some pivot point, or we're frequently at pivot points, and the direction in which society exists, in which investments are made, and what is going to be useful. And it's this recognizing these future shifts. I'm a big fan of scenario planning, and there are some great books out there on scenario planning about, you know, this whole what if, and you know, what if the Berlin Wall were to fall? You know, what if North Korea were to shoot off a couple of missiles? And then what if China did attack Taiwan? And it will.
That links perfectly to my next question, actually, because I was going to talk about Russia, Ukraine, and then China, Taiwan. So absolutely perfect.
You're very on point for the Russia-Ukraine thing, aren't you?
Yeah, we saw the Biden implemented some things today, didn't he? Some sanctions.
Yeah, stirring the pot, shall I say. As I said, I think this brings us back to the Russian-China Chinese nexus. Is it a coincidence that China has significantly increased its military flights, not just over the islands near Taiwan, but actually into Taiwanese airspace, at the same time that Russia is building up its tanks on the Ukrainian border? I don't really think so. I think they talk to each other. They're testing Biden. I think that there's if they could very easily. Okay. Hang on, I've got to dig back for this. World War I, World War II, Korea, and Vietnam. Oh yeah, they were all started underneath democratic governments, right? All started under democratic government. Who are the biggest warmongers? Oh, that'll be the Democratic Party. And I still doubt that Biden would roll out the Seventh Fleet to defend Taiwan. If you actually look at the wording of the agreement to provide defensive measures or something, apologies to your listeners, that's not verbatim, but it's somewhere in the ballpark. But I don't think the Seventh Fleet or whatever it is these days is going to roll out and actually choose to engage China. Whether or not, I mean, sending an extra 500 troops to Germany, yeah, whatever, at the moment, more likely to be a confrontation in Europe than in Taiwan, I think. But from your listeners' perspective, your question is, how do we make money about it? My preferred instrument here is the VIX, the volatility index. Okay, it's interesting because if we were talking about the Taiwanese dollar, I have been believing, idiot that I am sometimes, the Taiwanese dollar was due to go down because of this existential threat. But the global narrative has been around the Taiwanese semiconductor industry and the boom around the chip sector, rather than around it'll never happen. People should read Xi's speeches, read what he's actually says. But that's you can't beat the market. You can't beat you might be right, but you can't beat the market if there's enough people going the other way. The VIX though is another thing. I mean, I haven't seen it today. I think it's around about 17 the last I saw it. But I'm sure you can correct me, but around about 17. But the volatility index or the fear index on the CBOE is so it's a reflection of volatility, of how much prices going up and down in response to macroeconomic events. There's a whole generation of traders, generation might be overstating it, half a generation of traders who basically believe the VIX operates between like 11 and 15 and doesn't go anywhere else. We had the spike when COVID came in. I think it shot up to 63, which, or 63, 64, but, scared the hell out of them. They had no idea what was going on. Back in the day, it was, God, this makes me sound old. There were a lot more realized threats. And I think that this is coming back into play now with this geopolitical split, which impacts the markets, which is basically our macroeconomic driver, and which we then cascade down into our different asset classes. This is really this is coming back into play, and the moment it goes below 20, then I'm keeping a very close eye on it, and I as I am at the moment, I keep a very close eye, because we're always thinking about what are the catalysts for change. This could be an election, it can be an election result, it could be a ship going sideways in the Suez, it can be whatever, but the ruble is fine. The ruble is going down. I'm not too worried about the ruble, but the moment we get shots fired in Ukraine, which I think we will have, from the reading and from whatever I've heard, is that Russians, this is my opinion only, there are non-labeled troops already fully present, obviously, but it could tip over into something more in the with regards to Taiwan. I don't see how Taiwan will not be formally taken over by China. I just don't see how it can happen. The talk and the saber rattling which will accompany the preliminary moves will shoot the VIX up. If Biden or whoever comes next rolls out the troops, it's one of those, as we said, it's like a long bet. Buy the long dated options or buy the long dated VIX. I don't see a downside on that. Once the VIX goes below 20, you've got a good shot. Sorry, there are other ways in which to benefit from it. Generally speaking, I'm still a believer in the SIN stocks, so the SIN, so like drugs, sex, gambling, weapons of mass destruction. If you look at the yields on their bonds, if you look at what's going on with them, those are not going anywhere. You've got this. I mean, I was a little surprised by Deliveroo not to. I think it was more that it was overpriced rather than investors not getting involved because of the whole ESG side. But you can pay some money, it takes your choice. But for individual investors who want to be picking up 7, 8, 9% yields, there's still plenty of good stuff out there, as long as you're prepared to put your principles to one side. Very dodgy ground here, but anyway, go on. All right, away you go.
Yeah, no, that's right. That's great. Answered very well. So how about we go into cryptocurrency? I know we've got a bit of time. I'm sure you can speak about for a while about that as well. But yeah, if you go to cryptocurrency and Bitcoin, so we've obviously seen a huge growth in it. Why do you think it's been so large, and sort of predictions for the future? And maybe, I know the US and other Western countries have been talking about a ban potentially. So I'm not sure if you think they'll do that.
Okay, so diversification, fine. So digital gold, yes, I agree that it's digital gold. I don't think it's going to be a digital currency. I think it's already gone way past that. I would suggest that your listeners have a look at Bitcoin SV, which I think can be used. It's created to be a currency. I don't think Bitcoin was created to be a currency. But Bitcoin SV, I haven't got the web address, and I don't. Okay, do your own research. Do your own research. All right. I think that what's the other one? Stellar is another one that looks interesting. I think that these currencies these cryptos will find different functions, different purposes. Clearly, the Ethereum backbone is great, is strong, will continue to grow. Bitcoin already has yes, I think the target of what was it? So it's on 64 now. 75 next stop. I've for a while I've had 140 as my benchmark, as the benchmark of where it's heading. After that, I don't know, because I'd have to look at it within context. But I think 140 is where it's heading. Over what time frame, you might ask. So let's say we had this pullback. We had the resistance at 50. Now we're through 60. Head up to 75. Can we get to 100 by the end of the year? At the beginning, December last year, I said it would hit 30. Then there'd be a hesitation, and then it would hit 50 by the end of 2021, and then we bloody hit 50, right? Within the first quarter. I think I'm on record as saying all of that, by the way. So yeah, 140 is the interim target. But if you're looking for your X's, if you're looking to get your 3, 4, 5x, 10x, I think that there are other areas to look. Things like things like Bitcoin SV. At the moment, I'm just beginning to get my head around the various other types of digital offerings. I haven't got my head around NFTs, so don't bother asking me about that. Could this stuff be stopped by the central governments, by the central banks, or by governments bringing out their central bank digital currencies, the CBDCs? Yes. There's government clampdowns under the under the auspices of protecting the people and protecting the country. This greater control is well underway. I'm sitting around with some friends on Zoom, and we were doing we were going through the map of the world and trying to figure out where the hell we're going to go. Which country are we going to pick that's going to have a decent lifestyle, that's going to allow us to do the things that we want to do without being overly regulated, and how are we going to organize our assets? And it's not easy. It's not easy. It's not. I was talking to some very smart people, and it's not easy. There was sorry, I will get back onto cryptos in a second. And we were talking about, right, okay, so with the global warming, we're going to get this great migration north, the opening up of the new north, blah, blah, blah. So land, territory, whatever stuff up there might be useful, fine. Switching it all into art or motor cars or stamps or other stuff where, artists who've recently died because they're not going to make any more stuff and their prices go up, and you feed it into the new billionaires and whatever. But cryptos definitely has a part to play. Identifying which ones, much more difficult. There's I think that you look at the big players, as we were saying earlier on. I don't see that it's going to be. It's just an asset class now. It's just an asset class. You do not get JP Morgan. You do not get PayPal. You do not get Square. You do not get places like this getting involved with it. You do not get Tesla. Tesla maybe might do it just for a laugh. But anyway, you don't really get people doing this unless they see that they can make a decent percentage for themselves. But the question is, how much more scope is there for people to get their 3x, 5x, 10x. And I think it's much more difficult these days. And I would be, and without joking, this is about getting down into the real nitty gritty of it, understanding the backbone of what blockchain means. And I'm not, you know, I talk to other people, I pick their ideas, and then figure out where it goes from there. Smart contracts and all of that, and which type of algos. I think that there's an issue around the electricity, about the power required for the generation of this. I think governments are going to use this. They're going to beat cryptos over the head. That this is a anti-environment, whatever you want to call it. But I'm more worried about governments choosing to outlaw these, and or maybe just introducing significantly heavy taxes. You know, I really fear that we're heading for a high tax regime in the Western countries. High taxes, primarily for the top 1-2%. Okay, whatever, take your view on that. But also inflation, as we've already discussed earlier. Sorry, this is such a cliche because your listeners are smart. That governments don't give up power. They don't give way. They give away a little bit just to appease the masses, and so they can survive, etc. And this type of decentralization, in its broadest sense, is an existential threat. Again, if we look at what the China's doing against Ant, against Ma, against the others, you can see the type of response that anything that is a threat provokes. And I think we're seeing that in Western countries as well. You need to think very strategically about what do you have that is small, portable, high value, and is going to increase. I think virtual assets are fine as long as you trust the organization that is holding them, which brings us into another very complicated ball game. Those of you keep a close eye on free ports. Big fan of free ports. Okay, they appear in many novels as being centers of organized crime and the exchange of assets from certain nefarious people. But they also have a role to play. Oh, look, Britain's opening up 9 free ports, isn't it? I think, or something like that. Over the next few years. So yeah. Okay, sorry, next question.
Where would you recommend investors start to look when sort of trying to take advantage of the growth we're seeing in emerging markets? So, throughout Asia, Africa, South America, what are they anywhere that you're looking at in particular? Or
Rwanda would be a first choice. Very strong government, open for business, very transparent. Yes, okay, it's a pseudo dictatorship. Democratically elected, but it's very open for business. It's Wi-Fi friendly. It's good. I think that's an interesting area. If we're looking elsewhere in sub-Saharan Africa, you're looking at sub-Saharan Africa. The commodity. I'm not. Okay, Nigeria is doing incredibly well, but I just there are too many factions, and I don't see it as being very useful. Apologies, I know there's a lot of Nigerians out there, a lot of listeners. Apologies. South Africa, I think, is imploding, and it's going to be a huge problem. I think that you need to look at the commodities. You need to look at what is it going to do? Okay, is a certain country going to be a bread basket? Is it going to provide the food? which is possible. How's it fitting into the climate change matrix? Reed Collier and the four traps and bottom billion. How's that impacting certain countries? I'm a big believer. The technology is the thing that's boosting sub-Saharan Africa in terms of the problem has always been about you can't build railways, you can't build the roads because of their natural problems. Therefore, introduction of drones is going to be a huge advantage. Getting stuff to market, or to at least being able to sell it through internet. The issues of ePay, etc., the electronic wallets, all of this is very, very positive. I was having a discussion with somebody who was at BlackRock. There you go. They're at BlackRock about this, and very, very positive. That it's a separate narrative, because who does Africa, and I'm talking about sub-Saharan here, who does sub-Saharan Africa ally with? To a certain extent, okay, the Northeast is going to tie up with the Middle East. They've got historical ties, and maybe even the eastern side is going to tie up with the Middle East. They've got strong ties. That's fine. You've got the China's Belt and Road Initiative touching at certain places, which is going to be another strong player. So that perhaps is a good thing for your listeners to check out. Where exactly has China invested in ports and in buying land through the Belt and Road Initiative, through their partners in that? That's a good starting point. It's a good filter. So commodities, particularly metals, agriculture. I'm not. You've then got to superimpose on that the problems of the climate change challenge. How is water shortages and other climate events going to particularly impact? Okay, so that's Africa. But sorry, the sub-Saharan Africa I see is very similar to America for the large part. That you're going to get your self-contained. Self-sufficient regions that are trading with each other, and that whole area could very much work with each other rather than reaching out further to a certain extent. But certainly, because I was having the discussion about whether it would be better to buy an ETF for India or for sub-Saharan Africa. And for the next 5 years, I went for India. Because if you look at the Quad, this new trade agreement between was it Australia, US, India, and Japan, that four-way agreement, very, very powerful for India, and I think you're going to see great growth there. Latin America, as we said, we've already got strong. Well, you've got waning US influence, and you've got growing Chinese influence. I like it a lot, mainly again because you're going back to commodities again, and you're going back to rising standards of healthcare, rising standards of education, and I'm doing a big piece of work at the moment with a freelance, an organization that matches freelance Latin American workers with global corporations, and excuse me, and there's a huge demand, huge demand, and I think that's they get the advantage of the salaries, of low pay rates. They're able to compete very easily. That there is a digital bonus where we had a demographic bonus. I think there is now a digital bonus. But one of the most interesting things for me, and I get it again, back in the day when we had dinner party conversations and sitting around with whoever, and oh yes, well, no, Britain and Europe and whatever. It's just like, okay, so what about the deals that Kenya is doing with Peru? What? And it's like the people don't think about how emerging markets deal with other emerging markets. They're still fixated on this 20th century idea that Western liberal democracies are the rulers of the world. It's over. It's done. And it's going to become in my opinion, it's going to become a side story. And they're nudged out. You look at the G80. You look at the G80 and the way the G80 is increasing its power in global negotiations. Sorry, I'll come back to your question. In South America, I particularly like Colombia. I'm still a big fan of Colombia. I think they've got a lot going for it. Brazil obviously will do very well once they get if they get some sort of I know, okay, leadership is an issue, okay, but Colombia is the one there. Over in Asia, I live part of the year in Indonesia. I've got a home in Indonesia, in Bali, and I think Indonesia is a huge growth area. The youth bonus, the emerging, the amount of progress they're making on technological startups is incredible. And the size of the population, the scope of the country, the fact that they've got a strong Muslim ties clearly into the Middle East, all of that augurs well. They've got they did have strong partnerships with China. That's a little bit at risk at the moment. But I would go Indonesia, Colombia, Rwanda, India.
Perfect. So basically you're looking for obviously high growth potential, commodities and stability. Those are sort of the main three, especially when you go to Africa and South America, those sort of countries. Yeah. But the what we're looking at, I think, is a convergence. We're going to get a lowering of living standards and a lowering of wages in Western countries as we get an increase in the emerging markets. You know, this is not a conversation for now, maybe for another time, but I see that UBI, universal basic income, is going to have to come in as we get the massive unemployment in the Western countries. And anybody who says that, oh no, let's retrain the unemployed. Like, yeah, but you're not going to be able to retrain people at the rate at which a machine learning or AI can train itself. It's not going to happen. It's a waste of space. So you need a new model for these countries, and they're going to be undercut by the digital workers. Forget digital nomads. It's the digital workers of places like Indonesia, etc. By the way, just as a side note, where are most of the world's hackers and cyber terrorists coming from at the moment? And most of the hackers, is it coming from Ukraine? Is it coming from Russia? No, it's coming out of Southeast Asia. They are way ahead of the game, and there's a very high level of tech literacy. Yeah, perfect. So on to the last question, if that's okay. So it's based on the euro. Basically, we're seeing a massive. It's all been doom and gloom in this talk, I think. How everything's collapsing. We're seeing a massive divide sort of between the north and the south. How they're both sort of handling their economies and just financially in general. I'm talking to someone next week who's sort of predicting the downfall of the euro currency and Italy leaving it. We're seeing that by the end of the year, they're predicting they're going to have 150% debt to GDP. Do you think that's sort of something that should really be talked about? What do you think? Because I know everyone's
it's been talked about for a long time.
Yeah.
I have a 13-year-old daughter in Italy. So I spend a significant amount of time there. Don't know why I said that, but there you go. The issue, probably because she'll listen to this, but anyway, I'm trying to train her on Bloomberg, but she's 13. Italy is strange because of the amount of cash that is hidden under the mattresses. The mental approach that, okay, my house has gone down, or my second or third house has gone down in value, but I'm not going to sell it until I get the value that I think is right. And the amount of assets that are held on the wall antique clocks, paintings, whatever. There's a fortune in these types of assets, and also the focus on the small and medium-sized enterprises. Therefore, it is to a certain extent self-contained and just totters on, irrespective of what's going on. However, there is a but, and I think your future speaker probably has a very valid point. I think Trieste has already sold a big chunk of its land to China. I think that half of Piraeus in Greece, the port, maybe the airfield as well, I'm not sure, is owned by the Chinese. The European Union response to COVID for Italy was rubbish. The allocation of the green bonds and the funds and whatever the new acronym is has been really rubbish. Italy is pragmatic in the sense that it knew it would get tons of money out of being in the European Union. It would get a lot of benefits. If the wind changes, if it sees the strength of, Russia, Chinese axis, excuse me, it might leave. It's okay. You look at Orban in Hungary, and the Sputnik, what is it? Sputnik 5, Sputnik V. Can't remember the vaccines that are going in there. The Sinopharm vaccines that are going in. You look at the way in which it's possible to create these partnerships. There is a solid. God, people that I know in Italy are going to kill me, but anyway, there is a solid communist or socialist or pragmatic side to Italy, and I think it's possible that I agree. I think it's possible they could leave. What's it's named after a bridge, and I can't remember the name of the bridge. Is it named after a bridge? There are three. There's Hungary and two other countries, or maybe it's named after a castle. Who knows? There's already a tripartite agreement that are fundamentally against a lot of what's going on. Maybe, is it Slovakia? I don't know. Probably Slovakia.
Poland's probably Hungary.
Poland, Hungary, Poland, Slovakia, maybe. That are against. Thank you. That are against. I'm just shocked that I can't remember the name of the agreement. But anyway, that are against the European Union, and this separation, this fragmentation, I think is absolutely possible. Reducing the euro to a certain hub, but the critical point I don't actually see as Hungary or Italy. It's what's going to happen to Germany. What is Germany going to do? Is Germany going to stay at the heart of the European experiment? Is it going to turn inwards, or is it going to look eastwards again? It would be a 2% chance that it did that. Less than 5% chance. Don't know, but it's Germany is in transition again now. It's in transition. It doesn't know what its future is. It doesn't know what's going to happen to the rest. But sorry, going back to your key point, fragmentation of Europe, highly possible. Southern Europe versus Northern Europe, very possible. Would it make sense from an Italian perspective? Yes, it would, so that they could. The world loves Italy. The world would spend a fortune in Italy if the borders were open and costs were reduced by 50%. I think that it would make Italian goods globally competitive. I can easily see that Italy could find a way. Could find a way to prosper and to do well through other partnerships. The issue is, I don't know how well your next speaker knows the Italian political system, but trying to get agreement in Italy is like herding cats. Doesn't happen. So that I think is the issue. But if you continue to get the rubbish response out of the European Union, then the people will speak. It's perfectly possible. The Cinque Stelle movement that we had, the Lega Nord, and all the other variations, the manifestations of that could easily drive that. The answer is yes.
Yeah, perfect. I think he talks a lot about Target 2. I'm not sure if you've heard about Target 2.
Tell me about that.
It's quite interesting. So it's basically sort of talking about the inflows and outflows of the euro. So basically, if you look at Greece, they're never going to have an inflow of euros because they've just got a deficit. So basically what happens is when they send euros to Germany, it automatically gets sent back to Greece. And it's a loan, but it's not officially a loan. So it's sort of like this weird thing they do under the table, which I'm only just reading it now, so I'm sure he'll explain a bit more later next week. But yeah, basically what it means is that, you know, they still have money, Greece still has money to buy things, but Germany's owed this money at an interest that, you know, there's no interest on it. It's under the table, so it doesn't sort of count towards the actual, you know, their actual debt. So I think Greece has about 100 billion of this Target 2 that it owes, and then Italy has about 600 billion that it owes, and Germany is owed close to $1 trillion.
And so this reverts to the whole idea of the German mentality and how this goes complete. So it goes back to what does Germany, or what are the German voters, how much do the German voters know about this, and how much might that alter the direction of Germany? Yes, it's a southern thing, but it's a two-way street. Yeah, interesting, very interesting. I'll listen in.
Yeah, definitely. All right, perfect. That's all my questions for today, Gwyn. So thank you very much for joining us. Really appreciate it.
It's pleasure. Thank you very much. I hope apologies if I ramble a little bit or went off target. But I'm just answering as my brain works. That's all I can do. All right.